Welcome to the Scientific Investor channel. Today, cryptocurrencies are trading at a negative area. As we discussed in our last video, the price fluctuations happened based on the Bollinger Bands. The Bollinger Band was actually being squeezed and it just popped to the downside. Now today we will actually cover news and information pertaining to the digital asset XRP. As you can see, there are many tweets which brings out our attention to news with value and some perspectives. Along with these fundamentals, we will actually go through technical. We'll use a technical chart of XRP with some technical indicators like moving averages and MACD, and then we'll just use a blank or normal chart without any indicators, just to see the long-term price action and to understand if there is any similar patterns forming, if the history is repeating itself or it is rhyming itself. We'll actually go through that. So prior to that, I would like to request you guys to support the channel. It's a new channel and I would like to request you guys again that I provide updates on a regular basis. Please do subscribe and like the contents. If you guys have any comments or suggestions to improve the channel, do let me know in the comment section below. Please don't hesitate, obliterate the subscribe button. Now, the first one is from XRP_Crow at status. It's actually showing making a payment in a real time can be as simply the first step on the journey to a real-time treasury. Looking ahead, instant payments mean that liquidity buffers become obsolete with surplus cash invested elsewhere. Now, what you have to understand is Deutsche Bank is one among the top banks in the world. Yeah, they are in kind of trouble recently, but what you have to understand is that if one bank with that size is looking to reduce their liquidity buffers, say the Nostro accounts, the CEO of Ripple, Brad Garlinghouse, usually used to say this: if we can at least manage to reduce some of the Nostro accounts, take those money, use it for other things, right? So they are highlighting the same thing. Liquidity buffers become obsolete with surplus cash invested elsewhere. So you know that it's on-demand liquidity, right? The world is moving towards using on-demand liquidity. Now we have updates related to that. Now this is from I Am Legion. In this it shows the next generation of digital currencies in search of a stability. So as we know, currently fiat currencies are not having that stability which it needs to provide to the end clients, but at present they are looking for something else to provide something better. Now, when they talk about central bank digital currencies, they have their own issues, how they interconnect with other banks, say one central bank with another central bank. So here I would like to highlight that an alternative solution to give general public access to digital central bank liabilities would be not to provide directly through a central bank digital currency, but to do it indirectly through what could be considered full reserve banks. Now, it's technical terms of financial industry, which is hard to understand for normal guys like us. But in a nutshell, what I can explain here is, say if there are two central banks and the central banks actually want to provide services for their customers without showcasing or giving the access to the liabilities to them, what they will actually do is they'll use an intermediary. So say for our case, we'll assume that it's gonna be on-demand liquidity or XRP. So they don't actually need to hold XRP. I mean, the central banks don't need to hold it, but instead a third party can actually hold this. Now I'll read through their own words. The idea as described, for example, by Adrian and Machini, would be to allow new entities to hold reserve balance at the central bank. So that's the key there, to allow new entities to hold reserve balance at central bank. So it can be Ripple, right? We already know that they have a buffer stocks in escrow. So that is actually a huge amount in escrow, and if they are going to distribute that to central banks around the world, because as we know they are working with 50 central banks around the world, so if they are gonna distribute that among the central banks, this is gonna be happening soon. So if say European Central Bank is adopting this, then small countries, I'm not naming any countries, say there is a lot of expatriates in Europe who send back money to their home country, so there is a lot of corresponding banking system at present. So say the smaller countries will directly try to adopt this system. Now these entities which actually would not be so different from some form of stable coin. Now we get an idea, right? They're not talking about stable coin itself. In our last video, when we talked about stablecoin, some were actually asking Ripple or XRP is not a stablecoin. How can you compare this with ECB's new coming decisions? So here it is. It's directly from them, right? These entities, which actually would not be so different from some form of stablecoin, would have a very particular balance sheet with only central bank reserves as assets. Now XRP doesn't have anything else, right? They would not give credit nor buy any other type of asset, and only simple deposits as liabilities. They probably would not need to hold much capital, if any at all. So that's also a key. They don't need to hold much capital. So say if you want to transfer an amount from one country to another without holding capital, how can you do that? That's on-demand liquidity, right? At least for my sense, I understand it in that view. The entity would pass the remuneration of central bank reserves to depositors and earn a small fee for service provided. So yeah, I understand the same. Again, the small fee for XRP is, say, if you are looking at an XRP transaction, what you will see is, say, for example, you can see the fee as in drops, right? Say the normal banking system is taking you around 5 to 6%, whereas this is, fraction of a penny for a transaction. Let it be huge, even though the fee is too low, as we know. This system would allow households and companies to hold indirectly the central bank currency and would have two additional advantages. So you should be listening this carefully. First, it would allow central banks to focus on their mandates and not use their resources to provide direct services to their new customers. So they don't need to come up with something new because someone else is providing them with established softwares and technology. Now the second one is this would help prevent a conflict of interest for the central bank, meaning competition from central bank digital currency could be considered unfair by banks, given the crucial role central banks play in the organization of banking sector. So we know that, say, for example, Fed in US is coming up with this system and the other banks are considering it like, oh, come on, they are competing with us. That's not fair. So in order to avoid that particular item, this will play a key role, which would represent in a way an acceptable form of stablecoin. It's not talking about stablecoin, but an acceptable form. So for all these reasons, privately managed alternatives to CBDCs, central bank digital currencies, should not be discarded by central banks, and on contrary, should be considered as one way to provide CBDC to the general public. So they are not directly giving the central bank digital currencies to the public. Instead, they are kind of using another token or a digital asset to give it to the public, general public. So when we look at the supply of XRP, I know it's not been too long I've been in the market, but say from last 3 years, what I understood is many a times I see, in trading platforms like eToro, there are comments from a lot of traders why they have this much of supply. And yes, there are guys in XRP community who give clear, perfect answers for this, targeting the entire population of the earth, right? So anyway, we'll move on to the next one. It's also kind of a similar idea, but you'll get a bit more clarity as the visualization here is a bit more clear. So this is the payers intermediary. Then user 1, user 2, you are paying from this end to this end or this end to this end. It's just in seconds. See, the 2 prepares transaction by removing anonymity vouchers from users reserve. Then attaches vouchers and central bank digital currency units to the transfer. So it's so easy, right? Say you are sending euro to someone else, then the euro will be tokenized first of all. Now this tokenized euro, to say you are sending money to US, tokenized euro to tokenized dollar, and you need something to bridge intermediately, right? And that is where the distributed ledger technology and ILP will come into play. So there, as you can see in the 11, he noted in the bottom, you can see private money refers to money that is held in an account with the intermediary. So who is intermediary? And what is that private money? So you have to be careful about that, right? Now we, as an XRP community member, I understand what it is. At least I believe that it is consulting a claim on that intermediary rather than a central bank. So still that's happening. Now if you want to connect the dots, then read this. This process is based on CODA's confidential party mode, which enables states to be assigned to an end user by using one-time key that does not reveal directly the user's pseudonymous identity, thereby reducing privacy concerns. So the privacy concern is actually solved, and it's using CODA. And right now the only settlement asset used in CODA settler, as we know, is XRP, right? So that's much more clear. Now if you're looking at the 2-tier one, in which you're looking at a central bank, then you can see that the central bank is communicating with tier 2 or tier 2 intermediary, then they are issuing it to the users. So we just described it the first, right? Central banks want to actually issue the CBD, like central bank digital currencies, but they don't want to directly give it to the users. So they have someone in between. So who do you think that someone is, say, who actually follows the anti-money laundering regulations, know your customer regulations, blah blah blah. All the regulatory frameworks are actually there in set for XRP, right? The company Ripple has been working on that from a long time. Yeah, there are critics who comment on this, I know that. Now this is from Corey Johnson. I think at MoneyGram is not alone in getting what Ripple power XRP can do. They've just got the guts to talk about it more openly. That means this guy is not that guy like us, a retail trader. He has a lot of network, connections with top end individuals in established organizations. So when they're stating that, it's like you have to think in between the lines, right? So what I believe is, the 300 or around 300 unannounced partners of Ripple, as they indicated in Swell, are actually working on that. They are not just letting it go out in news. Now this is from Crypto News, and I connect this to the current price action. See, the price is actually moving to the downside, and I would like to highlight that your mental health is one of the most important things in life. Now what I'll do is I'll just use this quote of mental health and connect it with the price. So if you are not mentally sufficient to handle this pressure, you'll sell your position, and say after some time, maybe 1 month, maybe 1 year, we don't know, you'll regret that. Because personally I did that 2 years back, around 3 years back, and that really happened to me. So this is based on experience. Now let's have a moment of silence for all weak holders that were lost during this battle. Now that's from Roses on the Moon. So yes, when the prices are going down, some doesn't actually look at it that way. Now yesterday when I saw this tweet first, I was confused. MoneyGram is using XRP, but they are just stating that we do not hold for any period of time crypto assets on our books. That means they are not holding XRP. They're just using it to settle within seconds. They're buying it and selling it at that particular second. So I just got kind of confused. But when I actually connected the news with this news from ECB, then I started getting that dots connected. See, the financial institutions like the MoneyGram are not actually buying that and storing it. Instead, they are using it for a real use case. So obviously, if someone is to buy and keep that, and the price of that digital asset is to go to the upside, then yeah, obviously the price will go up and the fee will rise bit by bit. So personally, I think they will actually buy afterwards. Now that's just pure speculation from my end. Now RippleNet partner SBI Remit reveals cumulative remittance has exceeded $7.3 billion. That's cool, right? They are using RippleNet, and as soon as they start using on-demand liquidity, that will be sharp. Now we'll go through the technical analysis side. Say this one is XRP on weekly, and we'll just analyze it based on Wyckoff pattern as we described previously. Say we were looking at this particular area and we just broke to the downside. So yes, at present I'm not seeing a spring here. Instead we are going to the downside in a downside channel. Now when we look at the same in say 4-hour chart, just to understand the 20, 50, 100 and 200-day moving average and what the price action is doing with respect to that. Now if we look at it on a 4-hour, we can see the price is actually moving in this particular pattern, and now we are at the bottom. So whenever we traded around the bottom or the standard deviation for that particular one, say we bounce back to the upside. Yes, it's not that too high, it's somewhere around 2.5 0.25 to 0.26. But in order that to happen, we need to get a bounce from here, move into the price of moving range, say the 20, 50 and 200-day moving average, and then make that as a support and move up high. But at present, what we have to see here is we still have overhead resistance like this. So if the price does not manage to go above 0.22, if it retests that area and go to the downside, then it's really bearish at the moment. Now this is actually short-term price fluctuations, at least I believe it in that case, because now I'll try to showcase the market cycle in this particular aspect. Say this is long-term view of XRP. Say we'll look at the chart from 2014 as of today. Now when we draw the upper trend resistance line, we can see like this. Say the price was being rejected from this particular area, and then it broke to the upside here. Once it broke to the upside, if you zoom in and look at what the price was actually doing, the pattern which is being formed in that, can see one movement like this, then another curve like this, then again repeat the opposite, then kind of a double bottom, but it's really short in time duration. Now yeah, the history is not repeating itself, it may rhyme itself. So I was actually looking what is happening. The similar thing here, the first like this, then a U curve, then a shorter one, and then kind of a double bottom, but it's not actually a double bottom, right? We broke to the downside in a really bad way, but we are still within that pattern because it's not repeating itself, right? It's rhyming. So it's not sure that we don't know what time frame it will take to complete that particular pattern. We don't know how much deviation will be there from that pattern, but what matters is if the price manage to bounce to the upside within say 2 or 3 days and reach at least around 0.25, then that validates this pattern. But if we are to come to the downside, then that is really bad news for XRP. Personally, I'm an XRP holder. Majority of my portfolio is XRP, and it's not in a negative sense I'm stating this, but in order to be prepared, I'll state that if you are someone who's trading this market on a shorter time frame, then you should keep your stop losses in place. Say this was the previous low, you should keep at least below that. Say 2 to 3% or 5% below that if you are looking to trade this market like this. But at least if you ask me, I'll say that wait until the price manage to come above this area and retest. Yeah, even if there is no retest, but at least a close above that and then a continuity, you can buy at that area. Yes, the price will be a bit high compared to where it is right now, but it will be much safer to do so. But if you're a long-term trader, you're not considering say short-term 6 months, 1 year or 2 year price fluctuations, then you can buy and hold the asset for a long term. So as we just saw in this initial item, we understand that there is something happening in the background with central banks and our digital asset XRP. So in order for that to happen, you should hold your asset, because if you are tired and skipping your portfolio and avoiding XRP from your portfolio, then you are going to miss out what's ahead, what is to come. Now again, I would like to request you guys, please do support the channel, subscribe, like the video. There's a newer channel, I need support from you guys. I'll meet you guys on the next one. Bye for now.